Ira Epstein with your end of the day SPDR ETF video for this April 2nd, Thursday, 2020. Well, just when you think maybe the volatility won't continue, it comes on. I knew today's jobs number, and I'm sure you did. You had heard it was going to be a big number, and it wasn't jobs related. It's the claims for unemployment. And in looking at them, they were up big, double what the trade had estimated. The trade estimate was 3.1. We got 6.6. So we've got about, 10 million people that have filed. We know there's going to be a lot more coming in the week after. Now the question is, how do you prep yourself for this weekend's trade? Because, again, we're going into a weekend. We're going to get more news about the COVID. We keep hearing Mario Cuomo talking about how New York's about to get hit. Yet the numbers, I'm questioning. I mean, where are the big numbers? And, we're talking 100,000 deaths. I know a lot of people are going to get the COVID. It's the deaths that I don't want to see. And so far, they're not approaching anything like that. Now, there's admittedly a whole month to go, and we're going to see just how bad the situation gets. But let's take a look at the chart action and see if we can get a story. And as you can see, we've had these rallies off of breaks, just the way we've had here, and they seem to still come down. We're going to find out what this one does. When I take a look at the swing line study, the pattern is one of a higher high and a lower low. That, my friends, is not a trend. When you look at what this is all against, it's the 18-day average of closes. I see a market that has paused. It broke this big vertical decline that it had, and it's now going more or less sideways. That's how I'm reading the chart. When I put Bollinger Bands on, which offer a theoretical resistance point and support point because the market will trade within the bands 95% of the time, they're fairly far away. To get from 78.06 up to 87.05 is no small trick, or to get down to 69.08. It can happen, but it generally doesn't happen 1, 2, 3. More important is this number, the 200-day moving average of closes, because that often offers a resistance point. You can see how the market, once it got under it, first it came to it, bounced, and then when it was able to really stay under it, it accelerated. So coming up to it is the flip-flop of the first time you break to it. That's where I'd look for resistance if you can get that high. Momentum is flattened out, and you sort of see that right here. The market big up one day, big down the next. So we'll see what happens with that. In the SMH, which is your U.S. Semiconductor 25 index, you still have lower highs, lower lows, but they're fully negated by the markets closing over the 18-day average of closes. To reestablish the downtrend, I'd say any move under 110.18 reestablishes it and puts into play the possibility down here. Let's talk the other side. If the market gets over 121.34, while you break this downtrend leg, you don't start an uptrend. You would have a lower low, higher high. You'll hear that often from technicians, that they look at that. In the industrial sector, all I see is a market that rallied back up where the pros, I think, are selling it. I think they're hitting the market at the 57.97 area. They won't want to see prices over 60.26, but barring that, I think they're comfortable on the short side. In the energy sector, if we look at our work coming in, we've had a pattern of higher lows. We know that we've been fighting against the 18-day average. Now, yesterday's break low at 27.23 had taken out, or did it take out 27.09? No. It came down, it did not take it out, and today you just continued with that pattern of higher lows, higher highs. So this was not a surprise. I think seeing crude oil up at one point 35% today, that was the surprise. But when you look at the indices, you were up 10% in the energy sector SPDR. It was the crude itself that was going bananas, to put it mildly. In QQQ, the market made back a good chunk of what it lost yesterday, but it didn't change anything. You're not trending. You're going sideways. You have a higher high, lower low where you stalled. The trend was broken when we got through this number right through here. See that? Once you got over that, you broke the downtrend, and you went to that 18-day average, the line in the sand. You're just sort of hanging there right now. In the emerging markets, you're in a downtrend that is riding the lower Bollinger Band, but keeping you from getting acceleration to the downside because there's no follow through once you get under that number. You seem to come under it, then pop over it back and forth. In GLD, the market has been in a corrective mode, back to the 18-day average for 2 days. Got a nice pop in it today. The gold miners, same thing. And the gold miners did something important. They followed through. They had the higher lows. Today, they proved that that's another low. So they're back in the bull camp. You'd have to get under 2,300 to break that pattern. TLT is still in an uptrend, but very, very overbought. It's got to have a reason to run here. Could be the COVID with something bad next week. I don't know what's going to make it run right now because there's an awful lot of resistance here, and even the Bollinger Band comes in well before that. In the euro currency, the trend is down. Lower highs, lower lows. Resistance, 103.07. The pros will defend that zone unless it gets over 105.21, where I think they'd throw in the towel. Want to remind you, I've done my special report on stock indices. All you need to do is go to our website under the word research. It's there. It'll be up through tomorrow, then it disappears. It's only up for 3 business days, so if you're going to look at it, it's all about Fibonacci counts. And folks, all I see is a market that rallied up 38% in most markets, and I'm not saying that it did an awful lot. I know there's excitement today, but all it did today is make back some of what it lost yesterday. I'm Ira Epstein. You have a good day, and I'll see you tomorrow.